Well, USDA September crop report came out Tuesday this past week, and it set the tone in the market for the rest of the week. Or maybe made a bit of a mess for at least part of the week. That had to do with some acres that they surprisingly found. Whoops, surprise. Kohli and Cavanaugh standing by to talk about all of it and talk about demand as well. It's something we really want to share our thoughts on this week. Our visit with Kohli and Cavanaugh is made possible by support from the Allen County Farm Bureau, and the key word there is support. Kind of like the way the Farm Bureau supports 4-H and FFA kids, and the way your membership supports the farm families that feed all of us. Hey, go online and consider a membership. Online at itpays-to-be-a-member.org. Well, David, help us out here and lead us off with the groundwork of our conversation today, which is a review of some of those numbers for corn and soybeans this past week.
Absolutely. And listeners, pay attention to this because they made a big change in the corn acreage. And because of that, we got production at 15,134. The guess was 15,008. So a big increase there because they increased in harvestable area. And in beans, 4.146. Everybody was guessing around 4.157, so there was much less on the beans. But the deal there is they cut the acreage a little bit. Well, of course, because they increased the corn so much. But the real story is the corn ending stocks are 2.221. The trade was expecting 2.140. And August for the USDA was 2.202. So they were looking for ending stocks to be cut. Beans are 2.20. They were looking for 2.207, but August was 2.45. So they want to make everything sound bearish at this point. But really, the ending stocks on beans were a little bit friendly with a little tighter ending there. But the story is the market wants no good news right now. All they want to do is get the price as cheap as possible and try and sell as much possible as they bring.
John, that 765,000 planted acres of corn that they found, a bit more than a rounding error, so more than just a little bit of a surprise. Explain how that changes the math equation.
Well, that means you got more acres than we thought, so therefore we got more production than we thought. Like Dave just said, the market came out with a production number of 15.13 billion, and that was higher than projected. But we were all caught off guard with those acres. That's almost 800,000 corn acres they found. The market was expecting maybe 200,000 at the very most, and we ended up with 800,000, so that was the biggest shock of the report. They also found an extra 100,000 soybeans, too. That blew me away, and they did increase the carryover on corn, David, to that 2.22 billion. I'm just going to come back and say that, frankly, anything over 2 billion is plentiful, and anything around 2.2 and above is very plentiful. It gives you plenty of stocks, plenty of room for air, and it just knocks the wind out of corn. But that 220 carryover on soybeans, that's getting pretty tight. Corn, I would be very bearish on corn, except that at some point the strength in the soybeans will help support corn. But overall, corn, I think, needs to go lower to uncover some demand. Soybeans, I don't know. We'll have to see what that October report is. But, a half a bushel an acre is next to nothing. We could easily see a bushel drop and get soybeans really, really on the tight side. So let's keep an eye on that. That's a spooky number. It gives us very little room for air. Market has kind of ignored that. It hasn't paid much attention to it.
Yeah,
but
right.
I think that's fairly bullish.
Interesting, in lieu of that we saw beans, David, continue to tick down through the course of the week.
Yes, we sure did. And it seems like the export sales report really hit the market right in the face. This thing just looks like it wants to downtrend at this point, although I was predicting it would go sideways, and still it is looking to go a little bit lower from here. But at some point, somebody's got to say this is cheap enough and I need to take some of it.
David, I think you've got a good point there. The market still is sideways, but every time it rallies, it tries to rally, it falls apart.
Yeah.
And it goes down and tries to test the recent lows. That's on the December corn option. So far, it's been there 3 or 4 times. It bounced off of it, but it keeps going back toward that recent low. I think the market is going to continue to work lower till it uncovers some demands, where people say, hey, this is just too cheap. I got to buy it. Maybe we're there, but we don't see evidence of that yet.
I think probably going forward, wouldn't you say we're really moving into this place where the focus has really got to turn to demand? And I kind of, that's what I'm hearing both of you guys say is that demand destruction is becoming more and more pronounced as we go forward. And export sales this week, again, very lackluster. And our friends at the office of StoneX down in Indianapolis this week talking about China and how that really kind of factored in, particularly their relationship with Brazil at this point has continued to increase, and Brazil's production has increased significantly. And so that, along with this relationship with Chinese investors and how much they've been buying is really beginning to affect things. But David, I'm confused this week. This export sales report comes out. China, a featured buyer of corn this week, 6.8 million bushels. Caveat there, a lot of that was converted from unknown destinations. But, when we're looking at this demand picture and saying, China has backed off so significantly that that's a real worrisome thing, and then they come in and they're the featured buyer, well, it just seems to contradict that original statement.
Yeah, what the Chinese tell you, they turn around and tell their people something quite opposite of that. And, with the flooding they've had there recently with the typhoon and the other typhoons around the world also are considerable. And I think what we can look at here short term is the wheat market. The wheat market tends to try and rally, and sometimes it can be a leader. It used to be a leader years and years ago before soybeans. It was the king of the market. So maybe the wheat rally here being driven up because of the Matif exchange in France coming up, and also more word that EU is banning export from Ukraine grain to the EU. And then they said, no, we're lifting the ban. The point is that the wheat market's caught in the middle of everything right now, more than the corn and beans, because they're stuck with all this harvest news that's coming on. So the wheat market's kind of singling itself out. And I think we have to pay attention to that.
Yeah, David, something about wheat, though, that I read just recently. The wheat prices are under pressure and they're staying low, largely because of large Russian supplies. That Russia's had a big wheat crop and they got large supplies at the moment, and that's what's keeping the wheat price down.
Yeah, and there was some talk on Friday, John, that the Russians are trying to lead the wheat market all over the world. They're trying to be the wheat market for everyone and give them the best price they possibly can get. Is that war-related? I don't think so, but it's economically related to the rest of the Russian families. So definitely, yes, it does play a little bit of hob with the wheat market.
How does all of that factor into news that we're hearing here recently about increased planting of wheat here coming next year? Obviously a lot of research into planting intentions for next year. And we're hearing that there are a lot of farmers who are thinking, we're going to plant some wheat. Is it because of the unrest in the world, or because maybe we're looking at double cropping to try and maximize the acres that we do have?
I think the farmers are trying to maximize their yield, and their concerns, especially in the western grain areas, Kansas, somewhat in Nebraska and Dakotas, but I think they're trying to go further south and say, look, we need to plant more wheat. We keep getting stuck planting corn and beans, and they're not working out for us like we hoped so, especially Kansas right now. And I think, yes, they're planning to plant more wheat. Illinois, I'm sure will, and I think Indiana might.
A little bit more, but Ohio may pick up some. But hey, guys, Let's face the facts here that, wheat prices from where they were at one point this year have fallen back, but we had some pretty high wheat prices. So we're going to get more wheat acres simply because prices are much more attractive. The wheat belt, Kansas, Texas, and through there, and Oklahoma pull back on their wheat production because of some troublesome crops, and also wheat prices got low. Well, now they're going to come back and plant more simply because the prices are up. And that's wheat country. They do better with wheat there than they do other things. So now that the price is up, my gosh, yes, they're going to plant more.
They certainly struggled with the weather through that area when it comes to wheat. They've had some pretty tough years here over the last couple of years. Pretty tough years for the beef as well, David, and that has really been all wrapped around, I think, pastures because of drought conditions that really worked that thing lower. And David, you and I had talked about this here recently about cow calf operations. A lot of conversation there about cranking those things back up again.
Yeah, definitely so. And, beef fell apart this end of the week. Well, of course it would after Labor Day, but the cash cattle market took off. It's made all-time highs here. It's last a little bit over 191.70. So it definitely looks like the cattle market wants to go higher. And I think it's telling the cattle feeders, look, if you want a better price for cattle, you better market those animals instead of breeding them all the time. That would make it even tighter yet. So the market's trying to gauge here how the cattle feeders are trying to gauge this relative to the wheat market. And of course, you can always put off the cows and the calves into the wheat fields. They call them Wheaties at that point. But I'm telling you, this cattle market's just running straight up the flag.
Yeah, at the end of the week, you were looking at the price. You're thinking, okay, here comes that $10 cheeseburger. It was getting way up there. All right, part of the program where we turn it over to Cavanaugh for his final word.
Well, I would just like to point out something about this soybean situation is the average yield came in almost equal to expectations. However, the last couple of weeks, it's been awfully dry. A lot of the data was already collected for the September report before some of this dryness continued. So what I'm trying to get at is I think there's a good possibility that in October, we're going to see a decline in the soybean yield. Not a lot of decline. However, you take just 1/2 bushel off of that bean yield, and you've cut back supplies by over 40 million. And now you've got a projected carryover that's down below 200 million. It's in the vicinity of 175 million. That's a very bullish number. If that just takes 1/2 bushel off of it.
So you're saying we're probably not going to get the record here in the state of Indiana this year, and we're probably going to continue to see high soybean prices?
Yes, let's put it this way, relatively to corn, we're going to continue to see soybean prices stay relatively strong compared to corn, as beans are going to need to buy more acres next year. And that's going to be somewhat supportive to soybean prices. Yes, I'm fairly optimistic on soybean prices.
Thank you, gentlemen. The visit each week with Kohli and Cavanaugh is made possible by support from the Allen County Farm Bureau. You know, your local Indiana farm bureaus are supporting things like agriculture in the classroom, programs that educated over 40,000 kids, and political action that eliminated state inheritance taxes that accounts for as much as $300 million in savings annually here in the state. When you support the Farm Bureau with a membership, you're supporting the farmers that feed us. So even if you're not a farmer, please consider a membership. Go online to itpaystobeamember.org.
Podcasts by Federated Media.